morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it's a fresh new week and it'll be a super busy one because we have the earnings, we have two big IPOs opening, so plenty of activity will be seen for the Lal Street for this week itself. But for now, the GIFT Nifty is suggesting a flat start for our own markets. If you look at the pre-open rates, still about to settle, but however, we are looking like we're about to open into the negative territory. But yes, if we had to go by the global cues, the headline seems to be the women reinstating power because it's Sine Takaichi, which has been elected as the new leader of the Japan's ruling party. And this could mark the first ever female prime minister that the East Asian country has ever seen. So as a result, you could see Japan's Nikkei 225 index that has hit a new record high and is also up by about 4% itself. Topix is also doing well, up nearly 3% in today's trading session. So yes, Japanese markets have been appreciating this news that is coming in from there itself. But yes, other than that, Asian markets, they have been fairly mixed. If you look at the China and South Korean markets, they've been shut for holidays. And if you look at the US markets, they've been fairly mixed in the Friday's trading session also. And for now, the futures have been little unchanged from there on. Now, of course, we can see that the US government shutdown that continues for the 6th straight day, and the impasse over the federal spends is what has delayed some of the macro jobs report as well. So that's what we were expecting, some employment data that could set the tone of the Federal Reserve's next policy action. However, some delay over there as well. Now, President Donald Trump has also said that the continued impasse could result in mass layoffs of federal employees and has blamed Democrats for this. So we'll watch whether there is any progress in talks between the two Republican Party and, of course, the Democrats itself. But yes, coming back to our own markets, like I was mentioning, we have two big IPOs opening up. Tata Capital IPO, which is opening today. Then we have LG Electronics India, which is opening tomorrow. So some short-term liquidity crunch can be expected in the secondary markets for now. But we also have TCS kick-starting at India Inc.'s second quarter results this week. So we'll watch how the IT stocks react. We'll be also taking your stock-related queries, so keep dropping them on our live feed and we'll take them up shortly. But before that, let's take a quick check of the top headlines, Sisa. Stocks on Wall Street closed Friday's trading session mixed. The Dow Jones surged 200 points while the S&P 500 posted winning week, however retreats from record highs amid US government shutdown. Markets in the Asia-Pacific start mixed, tracking Wall Street cues. The Japanese Nikkei 225 hit record high as ruling party picks a new leader. Meanwhile, the GIFT Nifty is indicating a marginally lower start for our own markets. Oil prices rise over 1% as OPEC and allies announced a more modest monthly increase in production is expected. Meanwhile, the gold prices continued to rise on US government shutdown concerns. The Supreme Court will hear Vodafone Idea's petition challenging the demand AGR dues today, keeping the stock in focus as well. And a whole host of primary action which is due this week. Tata Capital IPO opens for subscription today, while LG Electronics India issue opens for tomorrow, while WeWork India's IPO closes tomorrow. So yes, like I was talking that, the pre-open rates have been suggesting a very quiet start for the markets. If you look at right now, Sensex is up about 79 points. Nifty is also above that 24,927 mark. But yes, it's going to be a quiet start for the markets. We'll watch out for some, good IPOs that will be opening. And of course, the two-day Nifty up move that we saw in the last trading sessions, that will be tested by these two IPO heavy week as well. But yes, 7 IPOs which will be worth over 30,000 crore rupees will be hitting the street this week. Our two biggest IPOs of the year will be also opening this week. We have Tata Capital and LG Electronics India, which will be opening in subscription. Tata Capital will be launching its 15,512 crore rupees IPO today. The price band is set at about 310 to 326 rupees per share. It is one of the largest share sale by NBFC in India and the biggest that the IPO market has seen since Hyundai IPO as well. Tomorrow also we're going to see LG Electronics, which will be opening its 11,000 crore rupees IPO tomorrow. We'll watch out for more details coming in tomorrow as well. And of course, WeWork IPO that is also expected to close for subscription this week itself. But yes, TCS that will be announcing its Q2 results. That will shape some of the action on the secondary markets itself. 9th October, that's a date from where the IT results will be started pouring in. So we'll watch out for those results as well. And some business updates that have come in from the banking majors, your HDFC Bank and Kotak Mahindra Bank, that that have announced their Q2 business updates, where of course we have seen that there is some credit offtake from both of these lenders that have given risen to the credit to deposit ratio of both of these banks from a sequential basis. So we'll watch out for those two on the anvil as well. That will also shape up the action for the Bank Nifty index, because that has been there on the 4-week running streak, the Bank Nifty index. So we'll watch out for how the both frontline indices and of course the Bank Nifty performs in today's trading session. But coming to the cash flows data, where the FI stood in the last trading session, they were the net sellers which sold stocks which was worth about 1,583 crore rupees in the cash markets, and DIIs that bought stocks which was worth about 490 crore rupees in the cash markets itself. Coming to the option queues data, Nifty put call ratio that has fallen to about 1.1 from 1.18 levels in the previous session, and the stock that continues to be a part of the FNO ban, that continues to be your RBL Bank at this point of time. So yes, that is all. That is the trade setup that we need to watch out for. But yes, for now the pre-open rates, both of them are suggesting a very quiet start for the Indian markets itself. But yes, like we were talking about, that both of the business updates from the banking majors will set the tone of today's trading session. So we'll watch out for how the markets react to all of this. But with that, let's quickly get on board with a technical expert of the show. Joining me is Rajesh Palviya of Axis Securities. Rajesh, good morning. Past two sessions, we have seen that Nifty has tried to make a reversal. What is the next levels that we need to watch out for Nifty from this week onwards? Because we have two big IPOs and then we have Q2 results, which also be starting pouring in.
Good morning. We have seen, mild recovery in the last couple of days, and looking at the immediate supply zone, which is placed at around 25,100 level, which is the major call concentration area at this juncture. FI long short ratio is still at all-time low. FIs are still not, covering their short position despite some recovery from the lower level. Though sectorial rotation is taking place, market is trying to find the opportunity where already price and time correction is already played out. The themes which are linked with the domestic consumption, I think here we are seeing continuous buying action to be there in the market. So some of the sector like banking, NBFC, automobile, even capital goods, power, all these stocks are showing some metal. These all stocks sectors are showing some bit of confidence as well as buying interest in the market. So on the downside, 24,700 is the immediate support area. If we breaks below that level, then we may see again unwinding trade in the market. Till we are holding this level, I think buy on dip should be your strategy for near term trade perspective. On the higher side, 25,100 is the key resistance area. For Bank Nifty, there is a outperformance. Bank Nifty is trading about to 20-day, 50-day moving average. So looking at the setup for Bank Nifty, managed to give breakout of falling trend line on the daily chart. So I think here, if it's continues to trade above 55,500, we may see further more extension of rally towards 55,800 to 900 zone. That's the next resistance area for Bank Nifty. So here one can hold their long position with stop loss of 55,300.
Mm, okay, those are the levels for both the frontline indices. But Rajesh, what about the metal index? One of the top sectoral performers. Can we expect the momentum to sustain throughout this week?
Yeah, most of the metal stocks have done well in last couple of trading session, and the way most of the large cap metal stocks have done well in the last week, I think metal index is now poised for giving breakout of its multiple supply zone. There is a rounding bottom formation is taking place on the weekly chart. So for Nifty metal index, any breakout about 10,350 could take metal index towards 10,450, 550 zone in the continuation of this up move. So after a long consolidation and accumulation, now metal index is almost ready to give breakout of last 1 year consolidation range. So here we hold our bullish view. Some of the stocks like National Aluminum is looking attractive from non-ferrous. So I think one can hold their long position here. and the minor decline one can add with stop loss of 214 on the higher side. 235, 250 would be the next target. Jindal Steel and Power and JSW Steel, both stocks are looking attractive. Jindal Steel and Power managed to give breakout on the daily as well as on the weekly chart. So here we could see continuation of up move. 1120, 1130 would be the target. On the downside, 1140 needs to keep as a stop loss. As well as GSW Steel is also looking promising. So I think some of the metal stocks, like as I mentioned, are showing sign of strength on the technical front on the near term chart. So one can focus on these stocks for trading bets on the long side.
Okay, all right. What about the FMCG? Because that index was one of the top underperformers last week itself. But yes, what can we expect from the coming week onwards itself, Rajesh, for Nifty FMCG, and anything that you're liking from the space?
So Nifty FMCG is showing sideways consolidation or mild profit booking, we can say, from higher level. But if you look at the little short to medium term structure, I think some of the stocks have already shown some rally, and but some profit taking at higher level is taking place. But from that space, I think Marico is still looking promising. If we analyze the short to medium term structure, till stock is holding above 690 zone, I think trend is likely to exhibit on the bullish side. And once stock crosses above 725, 730 zone, I think here we could see another leg of rally towards 760, 770 zone. Another stock from the same basket where we are focusing at this juncture is uh, Titan. Though there was a corrective move in last couple of months, but looking at the near-term, short-term structure, stock is trying to attract buying interest from its important and crucial support area. So I think any breakout above 3,500 can take Titan further higher, and possible target towards 3,650 we may see in this counter. Again, some new age company like Eternal, Swiggy, one can focus on this stock also, even DMart also. So I think here we may see some traction on the buying side. So from that basket, these stocks are one can focus for near term to short term perspective.
Hmm. Okay, all right. Let's also talk about Nifty IT index. Of course, one of the top underperformers in the past few weeks itself, given the kind of tariff noise and of course the visa hike news, and of course Accenture's weak guidance also battered down majority of the IT counters. Rajesh, what can we expect in the coming weeks? Of course, TCS will be reporting its results on October 9th. Can we expect the investors to remain on the sidelines at that point of time?
I think till now, most of the IT stocks are still showing sign of cautious stance. There is nothing much on the technical front at this juncture. Maybe street is expecting, waiting for earnings to play out, how these earnings comes and what kind of guidance they deliver in this quarterly number. I think then only we may see some sort of decisive action in this IT stocks. Though looking at the structure for near term, short term, IT index is still consolidating on the higher side. 34,200, 34,300 is the key challenging level on the higher side. However, on the lower side, if it breaks below 32, 33,700, I think we may see further more liquidation in the IT index, and could be furthermore downtick we can see in most of the large cap and mid cap IT stocks. But looking at the individual stocks, I think most of the stocks are now trading near to their previous swing low trajectory. So earning would be the key trigger for IT stocks, how these bellwethers deliver their numbers. And I think based on that, we could see some, action in this IT stock. So at this juncture, I'll suggest wait for earnings to come, and then one needs to take a call. Though we have already witnessed a long time correction as well as price correction in most of the IT stocks, we are almost down 24%, 25% for this calendar year for IT stocks. So I think if anything any surprise or any positive comes in IT stocks, so I think some short covering action cannot be ruled out. But I think one should wait for outcome of the quarterly earnings.
Hmm. All right, quarterly earnings that we'll be watching out for. Nifty IT index showing slim gains of about 0.3% at this point of time at the open rates. But yes, let's look at how the frontline indices have been reacting. Sensex, very mild start for the markets. Sensex up about 43 points. Nifty is also holding above that 24,900 mark itself. If you look at majority of the sectoral indices, Bank Nifty is where the buying interest has emerged given the good business updates that came in from the two private lenders, that is your Kotak Mahindra and HDFC Bank. So yes, that is where the market interest has been. Bank Nifty index doing well with about nearly 0.5% gains coming in there from the Bank Nifty index itself. But yes, auto index seems to have taken a backseat. Profit booking continues. 0.1% cut coming in from there. FMCG index, like we were talking about, the underperformance continues to this day also with about 0.1% cut. And Nifty Pharma index also seeing a cut of about 0.1%. So both of these pockets continue to remain as the top underperformers at this point of time. However, PSU banks once again good traction coming in from there itself. 0.5% gains coming in there. Nifty IT index very quiet start for the Nifty for the IT stocks, and Nifty Realty is also doing well with about 0.4% gains. If you look at the broader end of the markets, you can see mid cap and small caps. Most of them have been marginally higher. Major traction coming in from the small cap index. Small cap showing a gain of about 0.2% gains. And India Wix, if you look at that, that has seen a jump of about 4% in today's trading session. Other than that, if you look at the Nifty 50 gainers, so you can see majority of the banking stocks have taken the limelight, and that is what is contributing to the Nifty's upside. On the other hand, you can see Max Health also showing good gains with about 3% gains. Apollo Hospitals showing good gains of about 2.5%. So both of the hospital stocks have been doing well in today's trading session. Other than that, you can see Kotak Mahindra Bank with about nearly 0.5% gains coming in there as well. Axis Bank, Bajaj Finance, Shriram Finance, HDFC Bank, all of the financial stocks dominating the Nifty 50 gainers list. On the other hand, on the way down, you can see Power Grid showing a cut of about 0.5%, HDFC Life also showing a cut of about 0.5% itself. ITC, Bharti Airtel, HUL, some of the other losers on the Nifty 50. But yes, let's talk more about Kotak Mahindra Bank. Well, we did see that the lender has reported good growth in advances, about 16% year-on-year rise in net advances for the month of for the quarter of September quarter. The bank's average advances also for the quarter grew by about 14.6% on a year-on-year, and from a sequential perspective, also it was up about 4% from a quarter-on-quarter. The stock is doing well, 0.2% gains, and in the past 1 month also the stock has done quite well, 8% uptick coming in there for itself. Rajesh, what are the next moves that we can expect for Kotak Mahindra Bank?
I think stock is showing a sign of recovery from lower level, and now stock is comfortably trading about to 20-day, 50-day moving average. So, which is a sign of strength on the near-term chart. Looking at structure, we believe that 2150 is the next target for the stock. If it's able to sustain about 2090, I think one should remain on the long side of trade. 2150 should be the next target.
Okay, 2190 should be the next target. Let's take another stock in focus, that is your HDFC Bank, because that stock has also been doing well. We did see that the gross advances has increased by about 4.4% and 9.9%, which is your 10% from previous year. And deposits also has seen good traction with about 15% increase from last year, and it is up by about 2% on a sequential basis. If you look at the brokerages, they have also responded quite optimistically for the counter. If you look at the Bernstein has maintained an outperform call on the counter target price of about 1150 rupees per share. They believe that the improvement in loan growth is quite a positive in a growth-starved environment, and the weak deposit growth that the company has seen could improve margins from here on in the second quarter itself. On the other hand, if you look at some of the other brokerages, they've also remained quite optimistic on the counter on the back of this Q2 business update. But yes, the stock has slid from about 1000 mark and has been quite range bound. Rajesh, what is the next level you see on the screen? Because today the stock seems to be doing well, nearly 0.3% gain coming in for there.
So, Lovisha, if we analyze the near-term, short-term structure, stock is traveling in down sweeping channel, and now stock is negotiating with its falling trend line on this channel. So I think any breakout above 980 can attract some short covering action, and then possible really can extend towards 1020 kind of zone. But till stock not able to cross 980, I think a trend is likely to remain slightly on the weaker side. On the downside, 955, 940 are the key support area. So I think range bound activity is likely to be there in HDFC Bank. The major action we may witness above 980 zone.
Okay, all right. 980 zone is where the major action could be expected for HDFC Bank. Let's also talk about another financial stock, that is your Bajaj Finance, because the customer franchise saw good growth compared to the year ago period in the second quarter, and the customer franchise increased by about 4.13 million itself. New loans were also quite good, with about new loans booked were about by up by about 26% on a year-on-year basis. And the stock has also performed quite well in the past 1 month. Rajesh, today also the stock seems to be doing well. 1% gains coming in for the counter. What could be the next target level?
Yeah, sure. So one should remain on the long side of trade for Bajaj Finance. So overall structure is bullish, and the way stock is now consolidating, I think here we may see, continuation of uptrend. Though stock is almost trading near to its all-time high trajectory only. Any breakout about 1025 can take this stock further higher to 1100, 1140 zone also. So our view is bullish for Bajaj Finance. Buy and accumulate would be the strategy. On the downside. 970 needs to keep as a positional stop loss. Overall, we believe that this stock has potential to surpass 1100 zone.
1100, zone. Let's also talk about hospital stocks, because that have been doing well. You can look at Max Healthcare, Apollo Hospitals, Krishna Diagnostics. All of these counters are doing well. 1 to 2% gains coming in there itself. Rajesh, this is coming on the back of the central government health scheme that the government has released, and which is set to be effective from 13th October itself. And majority of your hospital stocks have been doing well. Technically, how do they look like?
Yeah, so we are tracking some of the hospital stocks where we feel that continuity of uptrend would be there. Fortis is one of the stock. Stock is showing very strong buying action across all time frame, and stock is trading near to its all time high trajectory. So I think Fortis one can focus from healthcare and hospital sector. Here we could see good traction. Another stock, healthcare global HCG, is also looking very promising. The way stock managed to give breakout of falling channel now, I think this stock has potential to extend its gain. 690, 700 would be the next target for the healthcare global. So here also one can buy and accumulate. On the downside, 645 needs to keep as a stop loss. Even on the Apollo Hospital also, stock is almost trading near to its all-time high trajectory only, though there was some profit taking at higher level. But I think still stock has potential to regain its all-time high trajectory very soon. So any breakout above 7640 can take this stock back to new all-time high trajectory, and we could see further higher level towards 7800, 7900 also. So buy and accumulate would be the strategy for Apollo Hospital also. On the downside, the 7450 needs to keep as a positional stop loss.
Hmm. Okay, all right. That's the view coming in for the hospital stocks. Let's take some of your viewer queries also. The first query coming in from Geetu Sandesh. She's asking the view on HUL for the long-term horizon. Of course, for now, the stock has been quite range-bound after seeing a good upsurge. Rajesh, what can the next target can be? She's looking for a long-term horizon.
So underperformance is there in this counter, though there was a recovery in the last couple of months from the lower level. On the higher side, the major supply zone is placed at around 2700, 2750. Once stock manages to view breakout about 2750, yes, we could see higher level of 2850, even 2900 going forward. So the if the horizon is for long term, I think buy and accumulate would be the strategy. Even in the decline, also she may add the position. On the downside, 2350 needs to keep as a stop loss. Till stock is managed to hold 2350. I think trend may likely to show some bullishness, and maybe any breakout about 2640 can take stock higher to 2800, 2900 also on the long term perspective.
Okay, 2614, that is the level that we need to watch out for HUL as well. Let's take another viewer query. We have Alex who's been asking the view on Crompton Greaves and what does it look like for the long-term horizon. Of course, the stock has been an underperformer so far this year. Rajesh, the stock has been on a sliding trajectory. What can we expect the next levels to be? Do you expect the underperformance to continue?
Yeah, stock is still making a lower top, lower bottom formation. So I think we may see further more underperformance in this counter until the stock not crosses about 320 zone. I think trend is likely to exhibit on the weak, bearish side only. Maybe any breakdown below 285 can take a stock further lower to 275, 270 zone also. So I think if he has not bought, I think my advice would be wait for some bottoming out sign in this counter, then one can buy and accumulate. Still trajectory is on the lower side, so maybe we could see further lower level towards 275, 260 also. So 320 on the higher side one needs to keep watch, or on the downside 270 would be the next level where again one should review it.
Okay, all right. Let's take another viewer query then. We have Shweta who's asking the view on Anantraj because she's bought the stock at about 582 rupees and she's asking whether she should book profits or add more at this point of time. What would you suggest, Rajesh? Because the stock has gained most in a year in the past 1 month itself. What can the next levels be?
So Anantraj is looking attractive. The way stock managed to give breakout, I think we could see further more higher trajectory in this counter. Possible target towards 745, 750 in the near term perspective, but on the long term perspective, I think 800 to 840 would be the next target. So buy and accumulate would be the strategy. If you have bought at lower level, can trail stop loss towards 660 and hold the position. Stock is showing sign of uptrend, and maybe we could see further higher trajectory in the near term to short term perspective.
Okay, all right. Bullish on the counter for Anantraj as well. Let's take another viewer query. We have Jiffin who's been asking the view on Easy Trip planners for a long-term horizon. The stock has been an underperformer as well. The stock has been on a sliding negative trajectory. Would you see any promising growth horizon on the charts, Rajesh? What would you expect for Easy Trip planners?
Oh, just a moment. So it's a low ticket size stock, and we don't track this stock much. Stock is not showing any sign of recovery or any sign of reversal. Stock is continuously making lower top, lower bottom formation across all time frames. So I think my advice would be avoid to take a call based on the technical is difficult in this counter. I think there is some challenges on the fundamentals also. So I think until unless there is no improvement on the fundamental, I think stock won't show any kind of recovery, substantial recovery. And on the technical front, nothing much. Stock is weak across all time frame.
Okay, weak across all time frames for Easy Trip planners. Let's take another viewer query then. We have Shweta has been asking the view on Ramco Cements. Her buying price has been at 992 rupees. She's asking whether she should hold or exit the counter. What would you recommend, Rajesh? Of course, the stock has seen a top of about 1100 rupees. From there, the stock has been on a sliding trajectory. What can we expect to regain its momentum in the coming days?
So stock is in still in the profit taking mode. There is no as such sign of recovery. Still stock not crosses about 1020 zone. Trend is likely to exhibit on the bearish side only. Any breakdown below 970 can take this stock further lower. So I think my advice would be avoid at this juncture. Let the stock to show some sign of recovery. 1030 needs to watch on the higher side. If it crosses, then either review it or then you can add a position. Even if you are holding it current level, I think 960 needs to keep as a strict stop loss.
Okay, 960 is a strict stop loss for Ramco Cements then. Let's take another viewer query. We have Debuke has been asking the view on Havells on how the stock looks like. In the past 1 month, the stock has been down by about 5% itself. But for the coming next days, what would you expect, Rajesh? What could the next levels be for Havells?
So Havells is still in the downtrend. Stock is now trading near to its lower band of this corrective move. Looking at the structure, 1450, 1460 is the key hurdle. If it's break below a key support area, if it's break below 1460, I think we may see further more downtick in this counter. On the higher side, 1530, 1540 needs to cross. 1530 is the immediate hurdle. If it crosses, then some short covering action we could see. But I think looking at the near term, short term structure, we may see further more consolidation as well as time correction also, as stock is not showing any sign of major buying action, despite stock has already corrected from its swing high level, and stock is still at lower trajectory of its correction zone.
Okay, all right. Let's take one stock in focus, that is your Vedanta. The stock has been doing well in today's trading session, given the company has achieved its highest ever quarterly and half yearly alumina production at the Lanjigar refinery itself. The output has been 31% on a year-on-year basis, and aluminium production that has also hit a record high, which is a strong in the past 1 month itself. But yes, the stock has run up quite a bit in the past 1 month. It's up about 25% in 6 months as well. Rajesh, what would you expect the next couple of months to pan out? Because the metal stocks have been doing well as well.
So Vedanta has also recovered from its recent low, and looking at the near-term, short-term structure, stock is now negotiating with its multiple supply zone. Any breakout above 785 can attract more buying action, and a breakout above 485 can take this stock higher towards 525 30 zone also. So I think hold the position on the downside. 460 455 needs to keep as a stop loss.
Okay. All right, let's take another viewer query. We have Shweta who's been asking the view on Suzlon because her buying price has been at about 59 rupees. She is asking whether she should average or exit at this particular counter. What would you suggest, Rajesh, for her to do for Suzlon? The stock has been an underperformer so far this year.
Yeah, stock is underperformer, and looking at the near-term, short-term structure, stock not managed to cross the supply zone of 5860 zone. So till the stock not crosses above 5860 zone, trend may remain on the downside only. On the downside, 52 is the key support area. If it's break, maybe we could see further lower trajectory. So I think keep a stop loss of 52 if you're already long side of trade.
Okay, 52 should be the stop loss for Suzlon Energy. Let's talk about Avenue Supermarts because that stock has been seeing some negative reaction on the back of its Q2 business update. We've seen that it has reported of about 15% year-on-year growth in its standalone revenue from operations for the quarter ended September. And the latest revenue figure reflects the highest Q2 revenue achieved by the company in the past 4 years. However, brokerages have not been quite enthusiastic. If you look at the Goldman Sachs, they've maintained a sell call on the counter. They've also cut the target price because they've seen that the weaker than expected sales has been despite the lowest base. They've seen that there is no meaningful acceleration in the store growth yet as well, and they've also cut the FY 26 to 28 and EPS estimates by about 2%. JP Morgan has also maintained a neutral call on the counter because they believe that the pace of the store expansion has stayed quite steady. However, the revenue growth of about 2% is below what they have been estimating. The stock is also down about 2.5%. Rajesh, what can we expect? An underperformance on the horizon?
Yeah, profit taking is happening in this counter, and this is the third consecutive week where we are seeing that some supply pressure is there in this counter. Looking at the near-term, short-term structure, stock is now trading below to 20-50 day moving average, which is a sign of weakness on the near-term structure also. So I think if it's continues to trade below 4350, maybe we could see lower trajectory towards 4250, even 4200 also in the continuation of this down move. So wait for this supply pressure to settle down at certain level, then one should review it. But maybe looking at the near-term structure, we could see more weakness. 4260, 4200 could be the next target.
Okay, all right. All right. All right. Just one last question before we let you go, Rajesh. Then, what are your top picks at this hour? We have Q2 earnings beginning this week. Anything that you're finding interesting in the markets?
So I think Bombay Stock Exchange BSC is looking attractive. The way stock has managed to give breakout of falling trend line on the daily chart. Though stock was in corrective mode, but it's a sign of reversal on near-term structure. And looking at this volume action as well as the reversal on daily chart, Maybe we could see further more traction in this counter. 2250 to 2300 would be the next positional target for this counter. So one can focus on this counter with stop loss of 2120. Another stock where we are focusing at this juncture is Paytm. We have already seen a corrective move. Stock has taken the support from its upsloping trend line. And looking at the structure, we believe that if it continues to trade above 1170, I think we could see upward momentum towards 1200 to 1220 for Paytm. So one can focus here also. Another stock is from the chemical basket. We have witnessed some of the chemical stocks have shown buying interest from the lower level. So SRF from that pack is looking attractive. Stock has formed a strong bullish candle in last couple of trading session, and looking at the overall structure, we believe that there is a sign of reversal. So possible target towards 3000 to 3020 we may see in the near term perspective. So one can buy and accumulate with stop loss of 2860.
Okay, all right. Those are the stocks that we need to watch out for. But with that, we have to let you go, Rajesh. Thank you so much for your time, and I hope that we connect with you soon.
Thank you.
All right, we can see that the markets are still holding on to those slim gains. Sensex up about 80, 90 points, and Nifty is also above that 24,900 mark. Of course, it is the financials which has been capping the downside in the markets. Bank Nifty index showing 0.5% gains itself. But yes, if you look at the majority of the pockets, metals, pharma, FMCG, auto, all of these indices have slipped into the negative territory. IT is where is some resilience also and some comfort. 2/10% gain coming in for the Nifty IT index. But yes, private and PSU banks, both of them seem to be doing well. And if you look at the realty index, also has slipped into the negative territory with about 0.1% cut. Healthcare stocks have also been gaining traction on the back of the government's move. 0.1% gain coming in there for there itself. But yes, with that, let me introduce you to Money Control Super Pro as well, which can be your ultimate investment superpower. You can get all the live trading calls and investment ideas from SEBI-registered experts and pre-identified chart patterns and AI-powered stock alerts right on your WhatsApp to help you trade and invest with confidence. You can download the Money Control app and subscribe to Super Pro today itself to get all the alerts on your WhatsApp. Right, with that, let's quickly move on to our next guest of the show. We have Sunil Subramaniam, market expert, joining us. Sunil sir, good morning. We've seen 8 days of correction followed by some reversal. How do you see the market construct looking like for the next few months then?
I see that the market will be still in a consolidating move, but with a slight upward bias. The reason is that FIIs, despite all the good news and the good RBI policy, continue to be net sellers. There's some moderation. I think against 35,000 crores in August, they sold only 23,000 crores in September, but it's still a net sell for the FIIs. Hence, the market, for it to really strongly go up, we need a change in their attitude and outlook towards India. But domestic liquidity is strong. I think RBI governor's steps have further strengthened it with lending against shares limit going up to 1 crore. So you can see that HNIs will probably tap into that lending for various purposes, including the stock market influence. The second aspect here, which is likely to keep the market range bound, is the heavy dose of IPOs that are likely. I think it's about 75,000 crores are just coming in this month, and even for the rest of the year, the pipeline looks very strong. So both FIS and DIS are likely to allocate some money out into these for the anchor books. So I think to that extent, some liquidity will be deprived from the secondary market. The third aspect, of course, is that why I don't expect too much of a correction at this now and an upward bias is because I think that the markets are going to, by and large, ignore the actual earning results of this quarter. The reason is there are a lot of headwinds there. The tariff headwinds for the export-oriented sectors are there, but then you also have the announcement on the GST, and the date was fixed at 22nd. So you had only your 8 or 9 days in this quarter. So I think if you look at it, I don't think the market is expecting much greater than in the large cap space, probably a mid to high single digit 7 to 8% single digit growth in the EPS, and maybe slightly better for the mid and small cap. So the earnings season expectations are not very great, and hence I think even if there are any disappointments that come through, it will be absorbed by the market, because the focus will be with the festival season ongoing. Daily you have reports of the Navratri sales coming through. October 10th onwards, the result starts this week, but by 20th, you have Diwali sales also coming in through. So you will have a very good positive momentum in the market from the fact that the top line sales numbers are probably going to be record breaking. Right. So I think to that extent, the market will get comfort from the fact that overall outlook for the economy is looking good, though this earnings season is not great. The second aspect on the earnings season, which I'd like to highlight, is that the commentary plus the guidance are probably much more important this quarter than in earlier quarters. Why do I say that? Because the sales which have happened since Navratri, right? What margins impact are they going to have? Now, top line numbers are going to be good. But if there's any clue in terms of the margin impact, that's something they would look for, analysts. The second aspect is, of course, this is the crossover quarter when a significant section of the analysts will shift their focus onto FY27, right? So to that extent, a discounting of one more year of EPS growth would make those valuations look a little more reasonable. And so specific sectors and stocks, they would look to see what is their outlook for the future in terms of the overall scenario. And the final point here is that I think also they would look for clues from the private sector capex perspective. It'll still be only clues. We don't expect very strong action, but given the sales at the top line, they're probably going to listen to these consumer-oriented companies and see, are they going to be running short on capacity, and so do they start talking about their capex plans for the next year. So a whole lot of talk is key at this earnings season, and hence I think that by and large there'll be a positive momentum. But like I said, for the market to touch new highs, you have to wait for a reversal in the FII outlook to India, and for that the big elephant in the room is, of course, the tariff scenario. And until there's some resolution around that front, we have had bipartite trade talks both ways post the 50% tariffs come through and go, but nothing significant has yet come out. We're still talking about red lines on both sides. But if we are to go by the CEA's statement that by end November, he expects a resolution of some sort on the tariff front, that's the reason to hang on to. If really something comes in, even an interim trade deal comes in, then I do see that that's likely to make FIIs shift their allocations towards India, in which case market could easily touch new highs. So a whole lot of information, and so it's a month that you eagerly look forward to in terms of analyzing the overall scenario.
Okay. Sunil sir, you mentioned that, this quarter, from next quarter is where the street is anticipating some good results to flow out. This quarter, we are expecting some underperformance as well. What would you suggest investors to do? For a quick buck money, is IPOs the current savior for investors at this point of time then?
See, what's happened is RBI has helped them by increasing the lending limits against IPO from 10 lakhs to 25 lakhs. So clearly, retail investors will be tempted to put in much larger amounts. Now, those IPOs which are going to be very successful, right? I don't think this is really going to make a difference because the proportionate ratios will kick in. But IPOs which are not really in favor, their subscription levels will shoot up because average retail ticket size of subscription is going to go up, right? So from that point of view, I do sense that retail investors would tend to subscribe to more IPOs. Now, whether it's going to pay off or not is a function of the overall market. But one good healthy sign that we are seeing, and reports are there that from a grey market pricing to the actual IPO pricing, there's a significant correction, which means that it gives the optimism that they are more reasonably priced now when they're coming to the market. And to some extent, so some amount of upside can be probably expected because companies are now placing those price bands at a much more reasonable level and not at a boom down time when they really tend to overprice this stuff. So I think it's a reasonable set of scenarios, greater liquidity in the hands of investors combined with more reasonable pricing. I do expect that retail investors would pay greater attention to IPOs. What the result of that, time will only tell.
Okay. Some big IPOs opening this week as well, Tata Capital and you have LG Electronics. How is your perspective? Are you subscribing to any of those two?
Oh, I don't know, I'd like to talk specific.
All right, all right. Yeah, yeah, of course. All right, let's also talk about banks because they have steel in the streets action right now after the RBI's policy action. What would you expect? Because given the private banks, they've underperformed PSU banks in the last couple of months. Do you expect the upcoming business updates that have come in from HDFC Bank, Kotak Bank, do you find them as an encouraging sign for the reversal in the underperformance?
Not yet, because see, this season is going to be a season to boost top line for everybody. So even banks, I would say, would sacrifice their net interest margins to try and achieve loan growth. Because see, loan growth has not been great, and consumer sales also prior to the GST announcements have not been great. So I think as a combined effort, of course, the government and the RBI have done their bit in terms of rate cuts and tax cuts, but I think the corporate sector and the banking sector are probably going to throw all their guns at this festival season to make sure that the customer goes and spends. So I think that banks would sacrifice their margins in the near term in the interest of the loan growth book. So to that extent, right, I would say near term, the margin numbers, especially this quarter's numbers when they come, margin numbers, there will be a little bit of shrinkage in the NIMs. And even for the next quarter, I think because the loan growth would pick up, but the margins would probably be still under. So there's a extent that private sector banks, as you mentioned, they are going to be the leaders, those and the NBFCs in this festival season retail play. The PSU banks, are not so competitive in terms of this because of the turnaround time and the processes they follow. So to that extent, not lending and this highly competitive time might work in their favor. And from a medium term outlook too, as a private cycle, capex cycle picks up, I would expect PSU banks then to perform better. And I think that's what the market is also discounting. Plus, I think the RBI's efforts at whatever relaxing a lot of norms, I think will help a lot of the good quality public sector banks too. So I expect this momentum in favor of public sector banks to continue for some more time. I think private sector banks, you will wait for the company specific, loan growth plus NIM plus NPA coverage to really take a call. Think it's early days to do that before the earnings season happens. So there will be still a bit of caution, though overall the RBI governor's policy had a fabulous impact on the banking and NBFC sector. With number probably or 22 was the number of reforms or rationalizations they brought in. So private sector, public sector, NBFCs all are going to benefit. But I think relatively, because of the relative undervaluation of PSBs versus private sector, also there's a lot more catch up that the public sector banks can grow. So to that extent, I would expect that for private sector banks to outperform public sector banks, it would take a little more doing.
Okay, okay. So, sir, would this mean that we've seen some good collection trends coming in from the MFI pockets also? We've seen in the past few months how they have already been under strain of correction itself. Would you say that you can relook at it, given the asset quality trends have been started to improve?
Definitely post the earnings season. I would still wait to understand from the companies. But I'll tell you why I'm also positive there is because I think if you look at the GST cuts on the FMCG, right? I think that's one cut which will go straight as savings into the lower middle classes pockets. Because you take an example like a soap, right? If a 50-gram soap is being sold at whatever 20 rupees, let's say, now the savings in GST, the point is that they're not going to reduce the price by that. They would rather increase the size of the soap. You get my point? So this can go through a number of these small ticket packaging. So customers to feel the impact, right? So the savings is better than the fact that the FMCG sales will go up. Why I'm saying when this is savings in the lower middle class, they are the key segment for the MFIs, right? So when they have a little more savings, then they're more likely to pay back those loans than to delay or to default, right? So I see that as a positive silver thread here. But like I said, it's better to wait for the earnings season discussions to happen and understand this space better. But I'm unbiased towards I expect an improvement to continue.
Okay, okay. Let's also talk about IT stocks. We have TCS, which will be reporting its results, from Thursday itself. It will kickstart India Inc.'s Q1, Q2 results. Sunil sir, what are you watching out for? Because we are expecting that the Accenture also has, highlighted that the demand trends are going to be weak. The guidance has been quite soft. But from a management commentary perspective, what are the factors that you are watching out for?
So I will watch for three, four things. So first is that I think the deal wins, right? So there are big deal wins that those are important because that will indicate that the buying atmosphere in the US and Europe is changing. So look out for any big ticket deal wins. Second is I do expect that their rupee based earnings will grow because rupee has depreciated. But on a dollar basis, right? On a constant currency basis, I want to see how the earnings outlook is, right? To what level that is. That's the second part. Third part is that some commentary from them on the H1B visa impact. My understanding that it's not a big impact because most Indian IT companies have shifted a lot of their H1B related workforce to nearshoring, onshoring, and stuff like that over a period of time. If I saw the data last time when the H1B thing came out, was that top five IT companies had only about 13,000 H1B applications got approved. It was more the India employees by the American MNCs like Google and Meta, which was dominating the H1B pool. So, but still, market had taken this news negatively. So the commentary from TCS to say that what is the impact of the H1B definitely will be a part. Even if they don't talk about it, the analysts will question them. So it'll be interesting to hear their answers and reinforce what I feel that really H1B is not a very big impact. And finally, what I expect also is again a little bit of a contrarian thought that I am expecting a rationalization in the workforces. Yes, partly due to AI stuff, partly due to this. But to me, while that's not great from a hiring perspective for the IT sector, I think it shows smart thinking by the companies that in a time where there's demand slowdown, if they are focusing on rationalizing the workforce, that means their margins are likely to be protected. So while it's generally a negative thing, they go hiring is viewed negatively. When they said about those 12,000 workers they're laying off, market took it negatively. But actually, it's a positive because the company is managing its overall staff adequate to the demand. So I would also look at how they are going to talk about the attrition and voluntary attrition versus forced attrition, and what is their outlook on hiring fresh AI related workforce. So a whole bunch of things to look forward to.
Okay, okay. Sunil sir, also you talked about the consumption theme as well. Let me touch upon that as well, because we've seen a good run up in the auto space as well. How would you expect the other, consumption theme to pan out for, be it your durables or at your staples for that matter?
So, first of all, as I just explained to you in the FMCG staples pack, I don't think the GST is really going to lead to a lot of sales improvement. People don't buy more soaps and more hack creams and more things just because their prices become 5, 10, 15% cheaper, right? So there will be savings in their pocket. So it's not necessarily a very big positive from a growth perspective, unless the FMCG companies keep some of the savings in GST to themselves, in which case it's positive from their EPS perspective. So we'll wait for the earnings season to see whether their margins get, but top line, I don't expect the staples to really show any great growth in this particular period. On the auto pack, yes, the numbers are already coming through to show very good growth in demand across the auto pack, and so that's reflected in the prices. But a lot of the price now, this price is in the good outlook is in the price already. I think auto has run up fairly recently, like you mentioned. On consumer durables, I think you have to clearly separate out. I would put it as a consumer discretionary rather than durables. I'll tell you why. Because there's consumer discretionary, which is high-end retail and stuff. That in the festival season, everybody buys a new dress or thing for Diwali. People go and tend to upgrade their brands during this period. So I think the savings there will directly reflect in a good top line growth in the overall discretionary space. Now coming to the durables part of it, right? Now there are two clear divisions there, right? There's one division which is related to heat and cooling. There's air conditioners, your water coolers, your refrigerators. Obviously, this is not the season for them. So to that extent, the impact of this GST cut and rationalization will probably be felt in the coming summer rather than right now. So what would you, that's why people tend to go and buy a vehicle now to the display. Yes, some like durables like washing machines and dishwashers would see a good pickup at this. So you're going to clearly separate out the kind of distributor because honestly, you don't buy an air conditioner when it's winter is approaching, right? You're not thinking about buying an air conditioner. So that's the thing with the consumer durable space, that is you got to look at it company specific and the type of product specific rather than just overall take it as one, consumer durable pack.
Okay, okay. Now that we spoke about a whole host of sectors, Sunil sir, any other sector that you believe that the market is not right now pricing in, but you believe that this is something that could outperform in the upcoming days?
To me, that's industrial capital goods. I was saying industrial capital goods and public sector banks with the bankers, but the market has picked up on public sector banks already. But industrial capital goods, because see, the one clear thing, like I said, the GST cut is going to lead to a sharp rise in sales across the consumption space. But at what margin cost? Right? Whether those margin sacrifice happens to boost the sales by the banks as well as this. But the clarity is that the top line will grow. I think that much I'm pretty much 90 to 100% confident that a lot of top line growth is going to happen across the consumer space. Now, that top line growth's impact, right, will be clearly felt in the capacity utilization in the country. So when the next 6 to 9 months, you will see that the capacity number should already inch up closer to 80%. And that's a trigger point for private capex to kickstart the cycle, because it takes another year and a half to build those new factories or the expansions or whatever, right? So they have to start at some point, and so that in 2 years from now, they're ready for it. So that trigger movement, right, will, I believe that is then give a huge boost to the suppliers of industrial expansion. So for me, in the manufacturing space, the industrial space where they supply the EPC contractors and the people who cater to expansion of these factories, right? That's the key, which is today not yet reflected, because people are still focusing on the consumption and the near-term gains and what's going to happen to banks, what's going to happen to IT. But if you just stretch your outlook to a bit over, let's say, 9 months to a year from now, and then for the next 3 to 5 years, I see that you'll have a very good capex cycle going through. So to me, within the overall infra space is the industrial space, which I feel that the market is yet not caught on to in full speed. And when that revelation comes through, the prices will, order books will shoot up, then the prices will shoot up. So it's a good time to start taking allocations into that. Do it in a staggered manner, because markets aren't going to change overnight, but it's a good time to build a portfolio in that space, I believe.
Okay, okay. All right, just one last question before we let you go, Sunil sir. You did mention that for the FI trigger, that is your US-India trade talks to take place. But for you, what is the next big trigger that the markets have been watching out? Is it the trade talks that is yet to fructify, or do you believe that the result season is something that will help move markets ahead? What are you seeing next?
No, see, for me, it's the trade talks which dominate the thing, because see, the market and the FII growth return to India is critical for the markets to get out of this consolidation mode that it's been. 1 year return on the Nifty is just flat or negative or positive, depending at what time you look at the screen, right? So, which means in the last 1 year, the market hasn't gone anywhere from a large cap perspective. And the FI's decision to allocate out of India, started last September, if you remember, has paid off, because India has been one of the most underperforming markets. So they made a very good tactical call and it's worked out. Now, because of that, because the Indian markets haven't corrected too much, right? The valuations still haven't become that reasonable. So purely from a valuation perspective, for them to come, like as there's a crossover quarter, so you might see the longer term oriented FIs coming back based on the earnings guidance as they revise their forecast for the year 2027, FY27. So while that is a gradual process, but as a trigger, I think that it's the basically the Trump tariff trade talks, all are in tea, right? So to me, that's the way I say it. The market is paying the price. There's something I've coined called the TERP. This is the Trump trade tariff. All the T stands for that: uncertainty risk premium. So that's the risk premium that India has to pay the price for. And I think once there is clarity there, there'll be a huge boost. So that's the dominating factor. But given the fact that's a yes or a no, it's like either it's going to happen this quarter or not happen. For me, the earnings guidance is the second most important thing, as you asked for. Apart from the tariff related thing, I think is the outlook of the companies for the next year, which is going to fashion the forecasted EPS, consensus EPS growth for the market. And then basis that, India might look a little less unattractive even to an FII. So I think that's probably what I will look for.
Okay, okay. Earnings guidance, that is what we need to watch out for. But with that, we have to let you go, Sunil sir. But thank you so much for your time and connecting with us.
Thank you.
All right, let's take a quick check of the markets. So where we stand as of now, if you look at the Sensex is still up, it's still in the green at this point of time. 200 points gain coming in for Sensex, extended its gains from today's trading session. Nifty is also up above that 24,950 mark itself. If you look at the sectoral indices that has been powering the Nifty's up move, that is your Bank Nifty index, a 0.5% gains coming in from there itself. And if you look at majority of the sectoral indices, if you look at pharma, that has slipped into the negative territory. However, the private and PSU bank indices is what holding the green. Holding the markets in the green. Metal index is also seeing some profit booking after last week's outperformance, 0.5% cut coming in there as well. Nifty IT index also holding well ahead of TCS Q2 results, nearly 0.8%, nearly a percent gains coming in from the IT index as well. But yes, all in all, we are in a fairly okayish market as of now. Whether or not the rally is expected to extend is something that we'll be watching out in the second half of the trading session as well. But before that, let me introduce you to Money Control Super Pro. It can be your ultimate investment superpower. You can get all the live trading calls and investment ideas from SEBI-registered experts and pre-identified chart patterns on your WhatsApp to help you trade and invest with confidence. So you can download the Money Control app and subscribe to Super Pro today itself to get all the alerts on your WhatsApp. All right, with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3 for closing, and we'll discuss how the market is developed with our experts and also discuss about the stocks that grabbed the headline. Until then, signing off, do stay tuned to moneycontrol.com.